Charles Fakroha has gone through the training of being a stockbroker, and for over a decade he's been one of the professionals practicing on and off the trading floor.
First of all, my first degree was on biochemistry, and after studying sciences, I got into teaching, and I needed to understand what they do in this stock exchange, and I made inquiries. Fortunately for me, a firm was recruiting young people. They said, irrespective of your field, and it was an investment company. I said, okay. I went for the interview, and they said I was successful. We should come for training. After the training for 3 months, they taught us the basis of capital market, stockbroking, and it seemed interesting to me. And eventually I started work there as a young investment executive. Coming into stockbroking, for me, it wasn't by chance, but I had always wanted something I could be more creative myself, something I could be more innovative, and I saw the stockbroking profession as that area that is, in the universities, these things are not being taught. I went back to my former school to find whether they even have a department of capital market. There was nothing like that. It's just maybe business admin, finance, But I'm happy now we are seeing some universities trying to establish that in their curriculum. So that's how I started as a stockbroker, and since then, it has been very, very wonderful. Stockbroking is not just a profession of buying and selling of shares. Stockbrokers do a lot more that people don't understand. The ones you see that come to the floor here that trade, they are trading already existing shares. And these shares are already existing. People want to sell and buy at the same time. Their main function for me personally is creation of capital. That is capital formation. You have a small scale business, you want to increase the size of your business, and you don't want to remain as a one-man business. Of course, you sell your shares to the public. Those shares you are selling to the public is going to give you more capital to increase your capacity. You will need to now consult a stockbroker who will now tell you the steps you need to take to raise this fund.
13.01.
Investing in the stock market is expected to fetch returns to the investor. However, Nigeria's capital market has been through thick and thin.
That was in 2008, precisely March 2008, that we had the meltdown in our market, and that continued for quite a few years, and even up to now, we're not fully out of it. But one good thing is that because of the transformation we've had in the market, and because of the level of, shall I say, sophistication of the stockbrokers, because we have very intelligent stockbrokers, and who have been able to manage. And because of also the level of transparency that has been brought into the practice of stockbroking, we've been able to survive that. As for the market confidence, the market has done quite a lot to build up confidence again, to rekindle confidence in the general public. We know, yes, that a lot of people lost money, but the confidence is gradually coming into the market, because people are now beginning to understand the nature of the market, and they're beginning to appreciate the level of transparency that has been brought into stockbroking.
The capital market is not really a very dangerous arena if an investor is either enlightened or guided appropriately by experts who operate in the market. You see, a lot of people have become extraordinarily very rich through the capital market, either as investors or people who come to access funds from the market. Okay, so that is at the optimistic side. Of course, we also have investments that have failed in the capital market. wherein people invested and lost their capital. There are many, but the most important thing really is that if an investor is coming into the capital market, the investor has to have a plan and would also need to assess the market through an expert who will guide him or her appropriately.
These stockbrokers maintain that there is no investment without risks, although there are safety nets put in place to safeguard the investor and his investment.
People really should not be afraid of the stock markets. They really should not be afraid because people are buying into companies. And what should really occupy the minds of people is really not just the price on the trading floor, but the company they are buying into. From the very beginning, certain things are pertinent. The fact that it is a company that is being discussed here. This company, do I really want this company? What do I want as my investment priority? And does this company fit in? If it's a company that fits into the investment priority of that investor, that investor should not be scared only based on what is happening in the market. The investor should be more interested in what's happening in the company. People don't examine the companies they buy into. They don't align the companies with their investment objectives. A number of persons buy, oh, it's been appreciating. If I had bought last week, by now I would have made 30%. Please buy. The broker is trying to ask questions. Say, no, please, my colleague who bought has made money. Buy. I understand what you're saying, but please buy. And then it begins to drop. Hey, I'm losing money. Please sell. When investment objectives are not properly aligned with the prospects and potentials of this company, when purchases are made based on, okay, the price is appreciating, it's now going down, now it's low, let me buy. So if a proper process is followed, over time, what we know in the market, over time, the mid to long term, nobody actually loses money in a stock that has good fundamentals.